All right. Hello, everybody. This is Vinny Thompson from AskVinnyThompson.com on Facebook and now on YouTube. So if you want to see this video in its entirety, you can go to my AskVinnyThompson.com website or go to YouTube. We were supposed to have a special guest that couldn't make it, but we have a better special guest, my main man, Ben Lavender, who's going to enlighten us about the mortgage industry as it stands right now and qualifying for a home, right? Your first step is for getting a home for the buyers is you're inspired, right? You want to purchase a home, you want to get something for your family, and for those in the know, you want to start your legacy, right? That begins normally with one of the biggest purchases you're going to make, which is a home purchase. Hopefully, you've contacted a real estate agent or in between that can help you, make the best bet so you can win to get your offers accepted and choose your financing, so on and so forth. I'm going to say realtors are important, but I'm going to tell you right now, the unsung heroes to the real estate game that don't get mentioned a lot are the mortgage bankers, brokers who make the magic happen behind the scenes. It's like with any good Disney movie, you need an animator, all right?
Indeed.
And that is going to be the mortgage person. I work with some of the best in the business, and Ben Lavender is definitely one of them. There's been lots of changes. Many of them things are above my level of knowledge or my pay grade. So I have lots of great professionals I consult with every day. Attorneys, bankers, architects, construction people, inspectors. They all help me look smart, when it comes to the Ask Vinny Thompson team. Hence the name. You ask me, I go to the sources who enlighten me and bring it back to the people like a good hunter. Enough said,
I like
Ben,
that.
take it away.
Vinny, thank you so much for having me. Appreciate it. The lending world is, for lack of a better term, it's fun lately. It's very, very interesting. So today is April 15th, 2020, right? So the guidelines are literally changing day by day. And everything that I'm going to kind of go over is lender specific. All individual lenders have their own new guidelines, which wasn't really the case about 3-4 weeks ago. The guidelines were more or less, I would say, among 8 out of 10 lenders, basically the same in terms of like debt to income ratio and stuff like that. Credit score was a little bit different. You do have a tremendous amount of variability when it comes to credit score with specific lenders during the regular loan or purchasing or refinance season. So, for instance, the one that's made major headlines lately is Chase, right? Chase is putting mandatory requirements of a 700 credit score and 20% down payment, regardless of the loan. Okay, so that's going to wipe out the majority of my clients out the box. The majority of them anywhere from 0% VA loans to a 10-15% down payment. They won't go into Chase anyway, so it's not a big deal. But for a lot of people who go to the what we call the regular retail banks like Chase, Wells, Bank of America, you're going to see that issue. So another issue that's coming up, right, is because the government basically said, hey, interest rates are 0%, which, Vinny, I think is certainly not the case. That is the Fed funds rate, which is more for credit cards and for home equity lines of credit and car loans and stuff like that. That does not pertain to mortgages. The bright side from our perspective is that everyone thought interest rates were 0, so my phone was blowing up for literally 1 week. And unfortunately, I'm, had to give everyone the bad news that is not the case. The good news is that interest rates are actually very, very low. So over the past 2 weeks ago, I should say, when everyone jumped on and was like, hey, let's refi, let's buy, the interest rates were actually really, really high. Okay, and what that had a lot to do with wasn't actually the lenders specifically and the guidelines and people losing their jobs. What that was the secondary market. It had to do with hedging on current rate locks, and it had to do not just the rates themselves, but potentially EPOs as well, which is basically an early payoff on a loan, and the secondary marketing, not the marketing, rather the servicer's ability to recoup their investment, right? Because basically a mortgage loan has to be alive for a certain amount of time for the loan servicer. Sorry, one sec. I'm getting a call. Can you hear me?
Yep, loud and clear.
Okay. Sent them to voicemail.
That's right.
So the servicer basically anticipates, a servicer buys a loan. And to be specific, a servicer is the person, for those of you that don't know, or the company that you pay your mortgage to on a monthly basis. Okay, so it's standard practice in the mortgage business for servicers to sell their loans. This is done to free up liquidity. But basically, there are all these different variables that cause the rates to fluctuate. Now, I'll go back to lending changes in lending guidelines.
And then before you do that, Ben, I want to interject because you, like me, Ben, like to give great service and then also try to educate your clients as to what's going on in the bank, right? You mentioned a few things which we probably have to get into another time. Who's going to service the loan? You mentioned Chase. It's important to know that the consumer or the client has to know the realtor can definitely help you understand that although Chase said, 20% down, 700 credit score, that's not industry-wide, right, Ben?
Correct. It's not industry-wide. So there are lenders out there who are still lending down to a 500 credit score, right? And then you have some, like what I'm saying is that every single bank right now, you have to really check with them. Or better yet, the truth is a real professional is going to tell you, right? You're going to submit your documentation and we'll say, hey, a month ago we could have qualified you for 750 grand, but right now we can only qualify you for 725. And on top of it, we need to see 1 month, 2 months, 3 months mortgage payments in the bank before you close. Okay, so it's those type of guidelines, and it's specific to the type of loan in addition to the type of property that you're purchasing, meaning whether it's a single, 2, 3, 4 family condo co-op, etc. Right. So basically in terms of the multifamilies, reserves are basically required right across the board. So to give you some perspective, with an FHA loan, if you're buying a 2-family, typically no reserves are required. And the standard for a 3 or a 4 family is that 3 months reserves are required, in some cases 6. Now they want
reserves,
to, regardless,
money you need to have in the bank.
Correct. So a reserve, technically one reserve is 1 mortgage payment. So if your payment's $4,000, the bank wants to see $4,000 in the bank after your down payments and after closing costs, right? They just want to see it there.
Right.
So it depends, again, it depends on the lender. It varies day by day, which is quite crazy these days.
Sure.
And the other thing is debt to income ratio. Okay, so for those of you that don't know, debt to income ratio is basically your gross income compared to your liabilities. And then there's another debt to income ratio, which is your liabilities and your housing payments. Or it's the other way around, rather. One is housing payments, and then one is housing payment plus liabilities. Okay, so those have been moved down, right? And sometimes there's some wiggle room depending on the credit score. If the credit score is on the higher side, they'll allow you to get away with possibly no reserves or a lower down payment, right? Same thing is going with the LTV, loan to value ratio. The more money that the client is putting down, the higher they can go in terms of debt to income ratio. So it's not flat, there isn't a standard rule industry-wide, it makes it challenging for the consumer because they could go to one lender and that lender says, hey, the max I've got for you today 450. That's all we can really do. Meanwhile, another lender is okay with 650. Right? Because another lender may not have those specific guidelines. So it's challenging from the consumer's perspective, and it's also challenging from the lender's perspective because the guidelines are changing day to day. What's funny is, like, Vinny, someone could be watching this video now who isn't ready to buy for another month. And in a month from now, the guidelines go back to normal because who knows, the economy goes back to normal in 2-3 weeks, which I'm not saying is going to happen, but it's, that could very well may happen.
Right. And I thank you, Ben, because when all these changes came about, you were the first one to give me a heads up, just on an educational level, to know how things were going to change. I had 2 clients. We were kind of in the process of like getting, accepted offer. Their money was fine, but they had, the 20% down. They were well qualified, which for me is not the norm. I'd say 30-40% of the people that I have like excellent credit and doing the old school 20, but a large majority are not. And for those with homes that I had for sale, the guidelines changed and kind of knocked them out the box. I believe one lady didn't have the reserves. We were like close to closing, and her bank said no. Another person put their money down, and because of the stock fluctuation, their money kind of went away for a little while. So I've been telling people just, hang tight for a few weeks to see, where we end up, with all this stuff going on with the pandemic. The banks, the money, the lending is going to be that seesaw effect for a while. We'll try to make our way through it and kind of just figure it out. And sometimes it's just time for a pause or just change up, And for me as a realtor, when I'm talking to somebody, I'm immediately going through like a Rolodex of who should I send them to? Okay, this person needs that. Okay, I know a lender that can do this. Or maybe they have an attorney. Is it probate? Is it estate? Is it legal issues? I'm going to Rolodex who I think is going to give them the best service that I've dealt with before.
Yep, gotcha. So, Vinny, let me ask you, the deals that you have currently that are kind of in a limbo because of these issues, what are you doing? Are you waiting? Are you putting the properties back on the market? How are you playing it?
Well, so the ones where I thought it was in limbo, they went through, they're okay, So one was close to closing in April, that fell through. So that house has to go back on the market. Me and the owner both agree now is not a good time because consumer confidence in, can I get in? Can there be a whole bunch of people looking to see the house? Is not where we want to be right now. Do I have virtual tours? Sure. Is that a great starter? Yeah. Real estate is still not a spectator sport. I got to go out, got to see, got to touch and smell. Yeah. This is a great starter for intrigue, but a total sale, that happened once or twice. So it's great for intrigue. So that was one. Another one, like I said, they're putting a healthy down payment. That's going fine. I think they're doing like 20%. And the other one, they're not doing 20, but their bank qualifications said that we're on track. We just got the commitment and, fingers, eyes, nose, crossed, doing like the little genie type of thing. Gotcha. So, and the listings I have were kind of just, waiting to see what's going to happen. Are they going to open back up, America and the government? You know America. What I'm saying? So just, yeah. So it's just kind of like hanging tight. Hence me doing a million Zoom calls,
Yeah, I mean, I honestly, I think that we will be opened up, I'd say within at least the next 4 weeks, because to keep going like this is crazy. And then you kind of, well, not us, but the government has to ask the question, the balance of people suffering from a poor economy and then people suffering from literally dying. What I was under the impression, I don't know if this is really the plan, from my understanding, they simply wanted to curve the death rate and people going into hospitals so they can produce enough equipment and have enough space to treat everyone. Because it's not magically going to go away.
Correct.
Right? You're still going to get people getting sick from it, and they're saying, okay, the summer heat may slow it down or crush it temporarily, and then it's going to pop back up in October, November.
Right.
So it's it's a tough question to answer, really. I don't know
Sure.
what's right. I don't think, because, you've got some moral and ethical questions there. And the truth
Sure.
is, people do suffer financially as well. And that type of suffering can lead to death. Financial
Right.
suffering can lead to homelessness, starvation, suicide. So people are suffering on both ends. And
Sure.
I don't think that there's a correct answer. I have no idea, but I think reality, we have to go back into this sooner rather than later. Otherwise, people are going to suffer tremendously. So,
Right.
and then the question is, when that does happen, sorry, I got another call. When that does happen, will the market go back to normal, not just in terms of real estate, but
Mm-hmm.
mortgages as well? And then it's going to be tough, because a lot of the people who got laid off, they're not getting their jobs back.
Right.
Right. I would
Right.
say the majority of them will. Right. But it's not going to be like, okay,
Sure.
magically everyone's got their jobs back. And I think one of the government programs stated that companies will get their stimulus, their benefits package, under the condition that they don't lay anyone off.
Right.
So it's going to help
Right.
with them. But I don't think some of the smaller businesses, I'm not sure if it applies to them. And some people, legitimately, it's going to take them some time to get their jobs back. And then the
Right.
question is, how much are they getting paid? Are they making as much as they were before? So I think it would be silly to believe that the market is going to be the same as it was a month ago.
Right.
That it's not going to happen, but it's going to ease in. And I do think, because everyone's cooped up at home, they're kind of looking at their house like, I wish I had a bigger house. I wish I had a nicer house. So
Sure.
I think there's also going to be a little bit of a boom, and hopefully that boom will balance it out. But that's kind of just my own theories.
From what you said, Ben, we do a series of Zoom calls at the Market Center, and guys that have been through, booms and busts have said almost exactly what you said. That I know for me, Ben, I feel like a total ingrate with my first world problems as I hog down every quarantine snack known to man. I'm looking at my house like, what? I don't like this house. And several times I'm like, look, I like when I move or something, or do like a major renovation. I can't stand it.
Yeah.
And it's okay. Like what you said, we are the consumers as well. And I made about 70 care calls, Ben. And out of the 70 care calls, we're just checking on my clients, past clients, people no longer in New York that have elderly. And 3 of those 70 is going to turn into a piece of business. And I'm still speaking to people that were going to list that are all just like waiting, at least 5 people that are like ready, but have like a wait and see. And I don't disagree with them, because we want to see what's going to happen. So when you said boom and bust, I think May, June are going to be huge. And I think if there is a second wave, at least we'll be ready. The curve seems to have flattened. All the resources that we have, thank God we're not using them. So, that boat that we have is not full. Hospitals can breathe now. Equipment is coming. So we'll be better prepared. I know New York City has they're going to start making their own test kits, thank God. So, hopefully we're at the bottom and now we're here, hopefully.
Hopefully. And then what's also going to cause, I think, Vinny, and I mean, you're the expert on this, but my prediction is that we'll go into a strong buyer's market, right?
Mm-hmm.
So reason being is, unfortunately, because of all the deaths that are going on, you're going to get a lot of estate sales, and the couples, the divorce rate is going to increase. I mean, it happened in China, and America, we love divorce even more than China. So I think you're going to get a lot of people splitting up, looking to sell, looking to buy. So if you're a potential buyer watching this, it's potentially, I mean, assuming that I'm right, which I usually am.
Right. The British.
It could be a nice time to buy, but again, time will tell. What do you think about that, Vinny?
I think it's been a seller's market for a very long time. We've been in a very long recovery period. I mean, something had to recess, something had to change.
And you and I have been talking about it on the phone, on and off, for actually the past, year or two. We kept saying to each other, when's this market going to turn?
it's crazy, you know, and it's just something had to give because the price is just really low. I'm glad for the owners because the owners are getting a chance to, you know, realize that value that they've been working on and paying their mortgage. Buyers, money was cheap to make a purchase of a home, right? You know, 3% down came back. You could start your legacy, but something had to give. Where are we going to go with these prices? I mean, 4% loans, man. I remember my father gladly got 13%. Was like, yes, at 13%, way back in the days. You know, 3 and 4, 5% is not normal. You know, I know this. You know, it's like people buy now. So it made sense that it had to happen. Just sad that it had to be a pandemic. You know, that
it one way or another, I think it would have happened. And the other piece to that, Vinny, is that I do think that home prices, at least from an affordability standpoint, were more or less leveled out simply because wages aren't increasing. Wages haven't seen a drastic increase for a really long time. And another interesting statistic I came across today, that home equity levels are at an all-time high. The average home equity amount is close to 50% nationwide. So for sellers as well, that's another sign that their home value is at the highest amount or close to the highest amount it could be, or it's getting there. And now's a great time to sell and relieve that equity. So it's a nice balance, right? It's great for sellers. It's great for buyers. So there's, you know, I wouldn't say it's a win-win because it's a tragic time, but it's definitely not a bad time by any means.
Yeah, I agree. And, you know, I know for me, I make sure to take my COVID breaks.
What's up, Femi?
What's going on? What's goody?
What's going on, guys?
It just came from nowhere. I was like, hey, man.
Popped in.
Yeah.
Femi, what's the word?
Nothing, chilling, man. Running around, doing the same thing, man. Trying to stay active, trying to, you know, listen in on these calls to try to, you know, get an idea of what everybody else is going through and, you know, just share ideas, throw around stuff.
Like a ninja.
How about you, man?
With my fellow agents.
Yeah, so how about you? Me and Ben been running our mouth, man. Femi's an agent also here in New York. So tell a little about yourself, Femi.
Well, I've been in the business almost 20 years. You know, cover Brooklyn, Queens, and Long Island. You know, just running around, basically doing the same thing. You know, hustling and trying to, you know, keep your ear to the ground, and you know, trying to stay in tune with what's going on. So, you know, like I said, doing this now almost 20 years. You know, whoever doesn't know me, you can follow me or keep up with me on all the social platforms with at Femi the Agent. So, but you know, we're all basically doing the same thing.
Yeah. What's your thoughts on where we're going, Femi?
I think I don't think that the market is going to get to where it was in 2007 and 2008.
Agreed.
But you know, everything that we're doing now, you know, stuff is still moving. You know, listings are still coming on the market every day. Things are still going into contract, and we're still having, you know, we're still closing on stuff. I actually have a closing with Ben on Friday, but you know, things are still happening. It just it's happening at a slower pace. So you know, we just all have to be we have to be patient. But you know, business and deals are still getting done. It's just you know, with the guidelines and, you know, some of the guidelines changing, you know, we just, you know, we got to buckle down and, you know, try to ride the wave. It's definitely going to get worse before it gets better. But I don't think we're going to see anything close to, you know, what some of these people are, you know, panicking or thinking that, you know, we're going to go back to 2007 or 2008. I definitely don't see that happening.
Yeah, I think for many people, that's our like worst point of reference.
Right.
You know, it won't be like that. And I was kind of fortunate. I'm hearing different things even with your appraisal. So I had 2 properties. They both came back at contract. But then I hear on the other side, you know, they get knocked, you know, 5% or so. Right. So, you know, the sellers now have to realize too, you know, you got to take off your king and queen hat. You know, we're going to shift from probably a seller's market for a little while. And hey, are you motivated?
It's a bias. You're absolutely right. You know, yeah, they have to make those make those concessions. And like you said, with the sellers, you know, it's always up to us to educate them and to let them know that, you know, even though you are a seller, at the same time, you're a business person. So you have to look at it as, you know, the appraisal took a little bit of a dip, but now this is the number that you have in front of you as we speak, as of today. We don't know what the market forecast is going to be. So, you know, it may be a little bit less than what you're looking to, you know, you were looking to get or to net. But at the end of the day, you have a deal in front of you. You have a contract in front of you. So it makes sense to move forward with that deal because it frees you up to be able to do other things. And, you know, you don't have to be tied down to that obligation. You have to be smart about it.
Are you telling your buyers and sellers now, Femi, to like hang tight? Or are you telling them let's kind of look and peek? Like, what are you telling your people?
I think for everybody, Vin, everybody has a different situation. You know, me, for the most part, I try to tell, you know, the buyers that we're on the fence. You still need to move forward and still do something. You know, right now could be a crucial time and a good time for you to be able to get a, you know, a little bit of a better deal on the property, because a lot of people are trying to wait and a lot of people are uncertain with everything that's going on. So I don't really think that it makes sense to wait. You know, if you have a property and the seller is motivated, you know, of course we can go in there, take our pictures, do everything that we need to do the video, and you know, do the virtual showings. So you do have a lot less competition out there as of right now. And also for the buyers, you know, the same thing. The people that are motivated to do something, now is still a great time to, you know, to move forward. What is the point of waiting? We don't. we're dealing with, you know, uncertain times. So if you have a buyer that's motivated or you have a seller that's motivated, I still think now is a good time to still move forward. And, you know, the thing that I try to always preface whenever I'm speaking to them, to let them know that, listen, when I bought my house, I got laid off exactly a week after I bought my house. So if I would have waited that extra week or 2 weeks, I would have never bought a house. And this was a month after I got into the business. Well, actually, I closed on the property 3 months after I got into the business. So, you know, anybody that's looking to buy a place, if that's your goal and that's one of your ultimate goals, what's stopping you? What's the point of holding back? Okay. If you don't buy that property, that money that you're spending on rent, you still have to spend it somewhere. So I would always rather put it into a mortgage as opposed to continue to pay rent. But that's you know, that's my take on it. All we can do is try to educate people and then try to, you know, speak our truths and then try to let them know a lot of the different case scenarios that we do hear out there. And, you know, just to offer some positive advice and, you know, let them know, you know, even with everything that's going on, I don't see any reason for you not to go forward. I mean, if you're on the fence and you feel like something may happen with your job, you know, I understand the concern. I would never, you know, try to push anyone or to try to talk to them from a salesman point of view. I think in these days, everything that we're doing more is you have to approach people from a human element, but then also educate them and then let them make that informed decision at the end.
Hey Ben, what are you seeing by way of like appraisals? So are people getting like knocked? Are they getting like at contract? You know, generally speaking, what are you seeing?
So, okay, so I'll touch on appraisals. The other thing I want to touch on, remind me if I forget and go on a rant, is to touch on forbearances, but I'll address appraisals now. So
you got to touch real quick because I got a 10-minute warning from
April.
No, not April, from the free version of Zoom call. That was like
snap! I forgot
10 minutes ago. Okay, so talk quick.
So so appraisals, it depends on the type of transaction. So for the majority of conventional loans, depending on the down payment, you are getting appraisal waivers, right? Meaning an appraisal is not even required, because what happens is that Fannie Mae and Freddie Mac have this like algorithm where they take all the average home sales in the area over the past 3 months, and then they look at the house, the square footage, blah, blah, blah. And 90% of the time right now, you're getting an appraisal waiver. Okay, whereas about a month ago, you were not getting those. So it was actually nice of Fannie Mae and Freddie Mac to give this to us. They did it on purpose to assist us. They got a little bit more aggressive. You're not getting it with certain types of transactions. So you're not getting it For cash out refinances, they want to see an appraisal. And for multifamily homes, they want to see an appraisal as well. Okay, a physical in one. But in some cases, they are allowing exterior appraisals. So on that subject, FHA and VA loans, which is for everyone on this call, that's a significant, at least FHA is a significant amount of our business. So you're not getting appraisal waivers on FHA and VA loans, but you are getting exterior access allowed appraisals, which is great, right? It's really, really good because a lot of homeowners don't want to let in some appraiser who, breathes all over their house and infects everyone. So I think that's something as strong listing agents, which you guys are, is very valuable to have that knowledge, because some people may not verbalize it, but it is an objection in the back of their head.
That's right.
Right. So I feel if it's something that you address, it's going to help. So that's appraisals. The other thing is forbearances. So I imagine, again, at a time like this, as realtors, you guys are touching base with a lot of your previous buyers, sellers, people who own homes currently. And, the question is what to advise them. So from our standpoint is that if someone needs to do a mortgage forbearance, they absolutely have to. They lost their job. We get it. Do what you have to do. But if you're able to pay it, right, pay it, because what the forbearance is being treated as from a lending perspective, even though there's no late payments, right, it's not a foreclosure or whatever. It's basically going to bar that individual from refinancing or buying a property for the next 2 to 3 years. It's basically being treated as a foreclosure. Okay, so if you can avoid it, if you have to take it, we get it.
Hey, look, what's that saying? If you know what I know, you better pay that mortgage.
Pay that mortgage. You gotta be smart. You gotta be smart about it. Everybody's thinking I got 90 days off to do nothing. So that's not the case, and that's not what's going on here. You got to be smart. You got to be smart about it. If that's what you're thinking that you're doing, you're part of the problem.
Let me tell you something. The pimp always wants his money, and that's the bank. Yes,
that don't never change. Where my money at?
That's right. If you can do it, beg, borrow, steal. I don't want to feel the wrath of the bank. I'm trying to make some financial decisions later on because I didn't want to. Like what you said, Ben. If you can't, that's a different story. And I know just some people leaving 401ks are easing up, saying, let you borrow the money to get through this. I would make the best long-term decision I can, and I wouldn't want to make a real good financial decision. And because I took money I didn't necessarily need, and I waited for the bank to tell me no. And I said to say during the recession, there was a lot of people who had modifications who said, bank, I can't afford $3,000. Okay, but you were paying 23. Where's the 23 at? Most had 0. So I'm just saying, if you can afford to pay it, pay it. But I'll let you get the last word before they shut us down.
You should pay it. No, I mean, I think I've about, wrapped it up. I mean, my name again, Ben Lavender, British mortgage broker. I'm everywhere on social media. I try and be in your face as much as I can. But these are uncertain times. I let that be the final one, which is a common theme here. So again, the guidelines are changing day by day, and make sure that you have a plethora of options available and that you're not banking on information that's old information, because everything is changing so frequently. And depending on which lender you go to, again, those guidelines are different. So get multiple opinions and just be smart and be safe.
That's right. And if you're not sure what to do about your mortgage or your finances, call Ben. If you're not sure about the realtor that you want to find out, call Femi. And leave me last. If you want to call me,
Vinny organized all this, so don't call him.
You can call me, or you can call Vinny. Vinny got that microphone, so he knows.
Call me
the gold microphone.
The gold microphone. There you
go. That's it. All right, guys. Thanks a lot. Appreciate your time.
Thanks,
no problem. Have a good one.
All right, Chad. What up?
Hey, Chad. Bye, Chad.
What's up, guys? How y'all doing?
Chad, real
good. We're about to
got one more minute.
Go ahead, Chad. Talk real quick. Where you from?
I'm from DC, Washington DC area, Maryland. Anytime you need assistance, I'm down here. Just ask Vinny. You know how to get in touch with me. And if not, you can call this. You can call this backwards number right here.
Yeah, I saw 240 area code. I'm like, okay.
Yeah,
That's not a New
that's,
York guy.
that's Maryland. Yeah, that's Maryland. Yeah, I just jumped on here to show my guy Vinny some support, man. He always support us down here, in the Upper Marlboro area. So I seen this link. I said, let me jump on here right quick.
Thanks a lot, man. Appreciate it.
I wish I'd have jumped on earlier, listened to more, and had more time to talk.
No worries. You go to YouTube channel, man. Hear me run my mouth. Ask me I'm on YouTube.
All right, now I got you. I'm gonna follow you too. All
right, guys.
Have a good one. Y'all be safe.
Later.
See you guys.
All right. You got it.
How do I leave? It's just me.